to Gwinnett County Public Library. Thank you for joining today's program, Social Security, Retirement 101. Today's presenter is Anise Norman. She's a public affairs specialist with the Social Security Administration. Now let's get started. Please welcome Anise.
Good morning, everyone. Again, my name is Anise Norman, Public Affairs Specialist with Social Security. And what I want to do for you is to give you a general overview of the basics that you need to understand when you're thinking about or preparing for retirement. One of the first things that you need to understand is that Social Security, it was never designed to replace your pre-retirement income. It is only going to replace approximately 40%. So what does that mean for you? That means that if you know that 40% of your retirement income is going to come from Social Security, you need to think about your other sources, such as, do you have a pension? Do you have a 401k? Do you have money in your savings? Are you getting VA compensation? And the question you should ask yourself is, will it be enough to sustain you in retirement? Because most financial planners are going to tell you that you're going to need somewhere between 70 to 80% of your pre-retirement income to live comfortably in retirement. And I'm hoping that by the end of this presentation, you have a better understanding of what your Social Security piece of the puzzle is. So with that being said, let's go ahead and get started. And the first thing that we need to think about is when are we going to retire? What is the right time for us to start to take that cash benefit from Social Security? Well, first of all, you got to understand it is a very personal decision. You figuring out at what point do you want to take that cash benefit from Social Security is going to depend on a lot of things that will be going on in your personal life, such as, your age, your health, your financial situation, as to when you want to start to take the cash benefit from Social Security. The earliest that you can take this benefit is at age 62. Keep in mind that if you do take your benefit at age 62, that is a permanent reduction on the benefit. And then the only potential increases you're going to see are going to be those COLA or cost of living increases. And of course, you have the option of waiting until your full retirement age. This is going to be based upon your year of birth. And I'll talk about that a little bit later on in the presentation. Or you may be that individual who's thinking long game and trying to max out their benefit, waiting all the way up until age 70. And like I said, the choice is yours. You can take it as young as 62 or waiting all the way up until age 70 or somewhere in between. That is strictly up to you to figure out what is the right age to take your benefit. Another thing to consider is, do you plan to go back to work once you start to take this cash benefit from Social Security? Because if you are under your full retirement age, there will be a earnings limit that you need to be aware of, because if you go over that threshold, then you're going to be overpaid with Social Security, and we would be asking you to pay that money back to us. Now, the next topic that we'll discuss a little bit later on in the presentation is Medicare. What we need to know about Medicare is, number one, it is not mandatory. However, if you do not enroll in Medicare at the first opportunity that you can enroll, and then you come back later on and say, you know what, I want to get Medicare now, just realize you could be subject to a 10% penalty for every 12 months that you wait or delay in enrolling in Medicare. And of course, today I'm going to promote our online tools and encourage everyone to create that online mySocialSecurity account. What the online mySocialSecurity account is for you is a secure suite of services that is behind the Social Security's firewall that allows you to conduct online or e-services, e-business with Social Security, such as some of the things that you're going to be able to do is to look at your retirement information, and if you need to file a claim, things of that sort is what you're going to be able to do behind this firewall. But if you've never created a mySocialSecurity account, I want to encourage you today to please visit socialsecurity.gov/my-account. When you reach that landing page, you're going to have two options here. If you already have an online mySocialSecurity account, of course you can log in. But if you don't, you're going to have the option to create an account. Once you create an account, you either need to utilize either ID Me or login.gov. So you'll have to have one of those accounts and go in using whichever one you select, using that username, that password. Then that's going to take you straight to your My Social Security landing page. And you're going to know that you're there because you're going to see your estimated benefit at age 62, full retirement age, and up to age 70. Some other things that you're going to be able to do behind this portal is number one, if you ever need a replacement Social Security card, now you can log into your My Social Security account and you're going to give us information from either your driver's license or your state issued ID. Once we process that request, then your card will be mailed to you within 10 to 14 business days. Other things that you can do behind the My Social Security account firewall is that you'll be able to utilize the retirement calculator. So sitting on that landing page, you're going to have your graph there and it'll show starting at 62 the amount that you could receive, and you can go up the graph all the way up until age 70, and you can move that arrow somewhere in between. Or you're going to have the option where you can just enter, say, for example, if you knew that you were going to retire at 65 in 10 months, you're going to enter that information in and it would project how much that estimated Social Security benefit would be for you at that particular time. Other things that you can do is if you needed a benefit verification letter, say, for example, you're buying your retirement dream home and the bank has asked you for proof of what you're going to get from Social Security. So log into your account, print off that letter, and that way you can go ahead and give it to the individual who's requesting that. In addition, you can always update your address, your telephone number, start or change your direct deposit information. And if you want to review copies of letters that we at Social Security have sent you, and we call those notices, you're going to have your very own personalized repository here so that you can go in and review those letters at your leisure. If you ever needed a replacement Medicare card or a 1099 or 1042 for tax purposes, also you can come here and get those items. And as I mentioned just a few moments earlier, when it is time for you to file for retirement, Medicare, disability, if you needed to file an appeal, you can do all of that through your My Social Security account. It's very easy for you to do. And one of the great things that once you do that, you're going to be able to track the status of your application to see where you are in the process. It'll either tell you what step you're on, or you may see that it'll say a percentage of completion until it gets completed. Once it gets totally completed, then you're going to be able to see the letter that we would send to you from Social Security in your notice repository there. And that's going to be just a few of the things that you can do behind the My Social Security portal. But let's talk about today, how are you going to qualify for a retirement benefit? Well, we all know that at some point over our life we had to work, right? But you had to have worked for an employer that pays into Social Security for you. And the way you're going to know that is when you're looking at your pay stub. And if you see that either Social Security or FICA taxes are being deducted from your pay, then yes, you are contributing into Social Security. So for next year, for 2024, each $1,730 in earnings, that gives you one credit. You can earn a maximum of 4 credits per year. So next year in 2024, as long as you gross at least $6,920 by the end of the year, you get your 4 quarters of coverage. And the minimum requirement to get something from Social Security is you must have 40 credits, or sometimes we'll say 40 quarters of coverage. Basically, at a minimum, that means that you have worked 10 years working, paying into Social Security. And then when you're age 62 or older, you're going to be eligible for something from Social Security. So let's figure out what that something is. So the way that we determine your something is that number one, we at Social Security, we're going to kind of adjust your wages for like inflation. And it's going to vary as to what formula we use, such as the earnings from the 1970s. They're going to be weighed just a little bit differently than the wages of today. The piece of the puzzle that I tell everybody that is the most important piece is the second step here. This is where we at Social Security, we're going to pull into the calculation your highest 35 years of earnings over your lifetime. There's a misconception with a lot of people. They seem to think that it is the last 5 or the last 10 years. And I'm here to tell you today that that is not true. It is the highest 35 years of earnings over your lifetime. So if you're that individual who only did bare minimum, if you only work 10 years of actual earnings, and that's fine. We're going to pull those 10 years of actual earnings into the calculation, but also attached to that will be 25 zeros. And of course, the more 0 years you have, the lower that average that benefit would be. And the result of that is going to be the average index monthly earnings. And basically that equates out to how much are you going to get from Social Security. Now, earlier I stated that you could start your benefit as young as age 62, or you may want to wait until your full retirement age. Your full retirement age is going to be based upon your year of birth. So take a moment on the screen to find your year of birth. The next column will show your full retirement age. What that means is that if you wait until that particular age to contact Social Security to start to receive your retirement benefit from us, you would receive 100% of your benefit. If you choose to take your benefit before your full retirement age, your benefit would be permanently reduced. And then the only potential increases you're ever going to see are going to be those COLA or cost of living increases. And I believe for going into 2024, beneficiaries, they're going to get a 3.2% increase, which will equate out to, on average, an extra $50 that they're going to see in that Social Security benefit. But also keep in mind that Medicare did go up the base premium for approximately $10 as well. So keep that in mind. But like I said, if you wait until your full retirement age, you get 100% of your benefit. If you take it before that, it will be permanently reduced. And today I have an example here that if at your full retirement age, your benefit is $1,000, and if you choose to take that benefit early, say at age 62, then it shows how much that benefit would be reduced by. I know myself, I fall in the last category of being born in 1960 or later. So my full retirement age is 67. If I choose to take my benefit early at 62, then I would receive 70% of the benefit because off the rip, because I chose to take my benefit early, it will be reduced by 30%. And again, that is a permanent reduction on the benefit. Now, I have another example that we want to take a look at this morning. This example here shows that the individual's full retirement age is 66. Again, I want to use that same $1,000 as the benefit amount that an individual would receive at their full retirement age. So if this individual chose to take their benefit early, say at age 62, then instead of receiving $1,000 a month, he or she is looking at receiving $750 per month. But let's just suppose that this individual whose full retirement age is 66, that when they get to age 66, for whatever reason, they're not ready to start to take their Social Security benefit because maybe they're still working, or this individual has just decided that, I'm not ready to take my cash benefit from Social Security. I want to wait all the way up until age 70. And any time that you wait to take your benefit past your full retirement age, you earn what we call our delayed retirement credits. This means that you can earn up to 8% for every 12 months that you wait or delay in taking that benefit all the way up until age 70. So here in this example, if this individual waited until age 70, then instead of receiving $1,000 a month, he or she is looking at receiving $1,320 per month. And keep in mind that this is the gross amount of the benefit. Social Security does not withhold taxes from your benefit unless we ask you to do so, unless I should say you ask us to do so. And if that is the case, then we would withhold federal taxes only from your benefit. But again, that is only if you ask Social Security to do so. Now, in addition to you, the primary number holder, who else can receive a benefit off of your record? Well, of course, your child. As long as he or she is age 18 or 19 and still in high school, or if you have a child that is not married, and we at Social Security are able to to determine that their disability began before the age of 22, they also could draw benefit off of your record. In addition to your child, your spouse may be eligible to draw benefit off of your record as long as he or she is age 62 or older with little or no work history, and as long as we can determine that y'all have been married for at least a year or longer. Or your spouse may be able to draw or receive a benefit at any age as long as they are caring for a child that is under the age of 16 or disabled. And now we're going to shift gears just a little bit to talk about a potential spousal benefit. And this means that your spouse may be eligible to draw a benefit off of your record. The most that your spouse could ever receive off of your record while you are alive and well is up to half of whatever your benefit would be at your full retirement age. But in order for your spouse to receive that, he or she must be at his or her full retirement age. So if your spouse decides, I want to start taking my potential spousal benefit off of your record when I reach age 62, well, guess what? That benefit, it would be reduced because they're choosing to take it early. And so they would receive somewhere between 30 to 35% of your benefit, depending on, again, that year of birth is going to determine how much they would receive off of your record. But in order for them to be eligible for the spousal benefit, how this works is number one, you, the primary beneficiary, you have to file your application for your benefit, and you have to start receiving that cash benefit. So when both of those things happens, this opens up the window of opportunity. So now your spouse can come in and apply for the spousal benefit off of your record. And one of the things that we're going to look to see is number one, has your spouse ever worked, and are they eligible for a benefit off of their own Social Security number? If the answer to that is yes, we will look to see how much is their benefit. If their benefit is less than half of yours, we can combine the two amounts to get your spouse up to half of your benefit amount. But again, your spouse has has to be at his or her full retirement age. And I know that there is a common misconception among people that a lot of people would say, oh, I can't take the spousal benefit because if I take it, it's going to reduce what my husband or wife, who's the primary number holder, what they would receive. And that is not true. Drawing that potential spousal benefit does not reduce what the primary number holder would receive. So say, for example, if they're receiving their full retirement of that $1,000, then that's what they're going to receive. You receiving your spousal benefit off of their record would not reduce them getting that $1,000. And like I said, we're going to look to see what the spouse can get off of their own record first. And if we if their amount is less than half of yours, we can combine the two amounts to get them up to half of your benefit amount. Now, for those of you who are married here today, take a moment to look at the year of birth column and find your spouse's year of birth. The next column will show what your spouse's full retirement age is. And again, I want to stick with that same example where I was using for you, the primary number holder, that if your benefit at your full retirement age is $1,000, that would mean that the most that your spouse could receive off of your record would be $500 because they can only receive up to half of whatever your benefit would be at your full retirement age. And both that third and the fourth column shows that if either one of you chooses to take your benefit early, it shows how much your benefit would be reduced by. And that's if either one of you decided that you wanted to take it at 62. Now, in addition to a current spouse, a former spouse may be potentially eligible to draw or receive a benefit off of your record. But if so, they got to meet certain criteria here. Meaning, number one, they had to have been married to you for at least 10 years or longer. And when I'm talking about 10 years of marriage, that is 10 consecutive years of marriage, one right after the other. Next, they have to be currently not married and age 62 or older. And in that scenario, the person that they're divorced from, which would be you, that ex-spouse, all you would need to be eligible for is either a retirement benefit or eligible to receive Social Security disability. You don't have to be at actually receiving it, just eligible for it. And then again, what we're going to do for that divorced spouse is we're going to look to see what can they get off of their own record first. If their amount is less than half of yours, we can combine the two amounts to get that divorced spouse up to half of your benefit amount, but only if he or she is at his or her full retirement age. And I do have a couple of examples we're going to walk through this morning. The first example I have is with Ricky and Lucy. So in this first example here, Ricky is receiving $1,200 a month. Half of that is $600. His wife, Lucy, she contacts Social Security because she wants to try to file for that spousal benefit off of Ricky's record. So when we check her earnings record, we notice that Lucy is indeed eligible for a payment or a benefit, and her amount is $1,000. So when we do the comparison, $1,000 benefit off of Lucy's record versus a $600 benefit off of Ricky's, we notice that her own benefit amount is more. So that means that Lucy would not qualify for a spousal benefit because she can get more money off of her own Social Security record. And that's the one that we would look to see. Whichever one is higher, that's the one we're going to give to her in that example here. So that one's going to be pretty straightforward. But let's take a look at our second example here. In the second example here, I have Luke and Laura. In this example, Laura is filing for benefits and she's eligible to receive $1,800 a month. Half of that is $900. Her husband, Luke, he's been receiving benefits for a while now in the amount of $600 per month. Well, now because Laura has filed and she started to receive her $1,800 a month, this now opens up the window of opportunity to allow Luke to be able to receive an additional $300 from Laura's record. So when we add it together, 6 plus 3, that's 9, and that's going to get him up to half of Laura's benefit amount. Also keep in mind that if Luke and Laura had any eligible children, they also would be eligible to receive a potential benefit off of Laura's record. Now, if for whatever reason Laura were to decide to stop or to suspend her benefit, meaning she stops getting that $1,800 a month, that extra $300 that Luke is getting, that will stop. Also, any potential benefits that the children are being paid off of Laura's record, that would stop for the children as well. The exception to this would be the divorced spouse. The divorced spouse, they would still be able to continue to receive their benefit. Now I want to transition and talk about the potential benefit that is available if your spouse were to pass away. First of all, we're going to start with who can get the money or who's eligible for the benefit. Of course, your child, as long as he or she is age 18 or 19 and still in high school, or if you have a disabled child that is not married and we determine that their disability began before the age of 22, they also could draw a benefit, a survivor's benefit. Okay, in addition to the child or children, then we have the widow, the widower, or the divorced widow or widower. They could start to receive reduced benefits as early as age 60, or they could wait until their full retirement age, or they may elect to start to take a benefit at any age as long as they're caring for a child that is under the age of 16 or disabled. And then, of course, the last bullet here talks about divorced widows and widowers may qualify. But remember, they must meet the divorce spouse's criteria, meaning they had to have been married to the deceased person for 10 years or longer. They are currently not married and age 62 or older. So let's look at the potential survivor's benefit. So if someone contacts Social Security at age 60 to apply for the survivor's benefit, they're looking at receiving 71.5% of the deceased worker's amount. If someone chooses this option, then when they reach or attain the age of 62, we at Social Security, we need to look to see, can they get a higher benefit off of their own record? And if that is the case, then we would switch them to their own record at 62. Now, if a person waits until age 62 to apply for a survivor's benefit, they're looking at receiving 82.5% of the deceased worker's amount. Or the person may choose to wait until his or her full retirement age. And at that point, they're eligible to receive 100% of the deceased worker's amount. Also, this gives them an opportunity to leave their own benefit alone, let it continue to grow up until age 70. At age 70, we at Social Security, we're going to swing back around, take another look to see, can this person get a higher benefit off of their own record at age 70? And if that is the case, we would switch them to the higher record. And the last bullet here talks about that full benefits are available to the widow, the widower, and the divorced widow or widower. So all we're saying here is that if the person who passed away, if they had a current spouse, and as long as the duration of marriage is met, meaning that you and that person were married for at least a year or longer, then the current spouse is able to receive a survivor's benefit. And if they were divorced from someone who meets that divorced spouse's criteria, they also could draw a benefit off of this person's record. So they both could receive a benefit off of the record. Now, one of the common questions that we get quite a bit at Social Security is people always want to know, can I go back to work and start to receive my Social Security benefit? The short answer is yes, you can, but you need to understand what are you up against. So for next year, for 2024, the earnings limit is 22,320 for the year. That means that if you are under your full retirement age, such as if you took your cash benefit from Social Security somewhere between 62 and before you get to your full retirement age, and you decide to go back to work, you cannot earn any more than 22,320 for the year. Breaking that down on a monthly amount, that is $1,860 per month. If you do go over, you will be overpaid, and we at Social Security, we will send you a letter in the mail asking you to pay us back $1 for every two that you went over. Now, in the year where your full retirement age is going to be reached, then the earnings limit, it goes up. So again, for next year, for 2024, the new earnings limit is $59,520 for the year, breaking that down to a monthly amount that is $4,960 per month. Again, as long as you don't go over, excellent. But if you do, this time you have to pay us back $1 for every three that you go over. So let's just suppose that I'm going to reach my full retirement age, and we're going to say next year we'll say August. Okay. And, I've started my Social Security, taking my cash benefit, and I have a part time job somewhere. That means that I can work from January 1st through July 31st, earning up to the 59,520 for the year. When August comes around, when August 1st comes around, even though my birthday is later in the month, at that point, there is no limit to how much I can work and earn. I can make $1 million. Social Security, they don't care. But let me just warn you that I always tell people that, normally IRS is going to have their hand out because they're going to care about, those earnings and being able to tax it. So I always encourage individuals that as you're planning or preparing for retirement, be sure that you're talking to your financial planner, your accountant, your tax preparer, so there's no surprises as you transition into retirement. Now, the other thing that I like to highlight with regards to the numbers that you're seeing on the screen, or these earnings limits, is that when I'm talking about these limits, I'm strictly talking about you going back to work, either working for an employer who's deducting Social Security or FICA taxes out of your pay, or if you are self-employed and you're paying your self-employment taxes. These numbers do not include any pensions, annuities, 401k, rental income, any other type of income. It is not included in this. This is only about you going back to work in the earnings limits. The other question that I get asked quite a bit with regards to working and earnings is, a lot of times someone will say something to the gist of, I started to take my Social Security benefit at 62, and I decided to get a part time job somewhere so I could stay active just to get out of the house. And I noticed that this employer is taking Social Security taxes out of my pay, and they always want to know what happens to these new earnings. Well, When you reach your full retirement age, and let me just say it does not happen exactly at that moment, but somewhat where a short while later, we at Social Security, we are going to go back and we are going to do what we call is a recalculation, or sometimes you'll hear it called a recomp of your high 35 years of earning. Because remember, your benefit amount is based upon your highest 35 years of earnings over your lifetime. So if these new earnings, if they do make a difference in the calculation, then guess what? You're gonna get a letter from Social Security and it's gonna say something to the gist of, this is what we paid you. This is what we should have paid you. We send you the difference in the money, and then you're going to have a new monthly benefit amount. So, yes, we do go back and look at it. We don't look at it exactly when you hit your full retirement age, but a short while after that, we do go back to look to determine whether the new earnings do make a difference in that calculation for you. Now, another common question I get asked quite a bit is individuals always want to know is whether or not the Social Security benefit will be taxable. My response is it depends. And in order for us to determine whether or not that Social Security benefit will be taxable, we have to look at your adjusted gross income from your tax return. You're going to add to that any non taxable interest that you may have. And then whatever you're receiving in Social Security benefits, cut it in half, mix it in the pot, and then you're going to have your combined income. Once you have your combined income, this is where we have to determine, how are you filing your taxes? Are you filing your taxes as an individual or a member of a couple? If you are an individual and if the combined income is less than $25,000, you do not pay taxes on the Social Security benefit. If that combined income for an individual is between $25,000 to $34,000, you could pay taxes on up to 50% of that Social Security benefit. And if that combined income for an individual is more than $34,000, then you could pay taxes on up to 85% of your Social Security benefit. Now, this is an IRS regulation, but we at Social Security, we like to make you aware of this. So if you have additional questions with regards to whether or not the Social Security benefit is going to be taxable, we would have to refer you to irs.gov. And the publication that you want to look for is 554. That is the tax guide for seniors. Also, remember, make sure you're talking to your financial planner, your accountant, your tax preparer, again, so that there are no surprises as you transition into retirement. Okay, so when are you going to apply for your benefits with Social Security? Let me just tell you, the earliest point that you can contact us to file for your benefits is going to be 3 months in advance. So 3 months before you're ready to start to take your cash benefit from Social Security, and 3 months before you're ready to enroll in Medicare. That is the earliest that you can contact Social Security. The easiest way to file that application is, of course, logging in through your mySocialSecurity account and using the secure suite of services. The other option is you can always contact our national 800 number or your local servicing Social Security office to schedule a telephone appointment with us. And you can rest assured it doesn't matter if you filed online or you're speaking to a representative, you will be asked the same series of questions. Then at the end of the interview, if we need anything from you, we will let you know, such as if we need a marriage certificate, a divorce decree, financial information so we can establish that direct deposit for you, we will let you know. If you have filed online based upon your zip code, that is going to tell you what local servicing office that you need to send the information into. If you are speaking to a representative on the telephone, then they will direct you on how to get that information to them. That way, once they can get it, they can finish adjudicating or processing your claim so that you can start to receive your benefit or be enrolled in Medicare. So it's really straightforward there. Okay, this is the part of the presentation where I normally tell people, if you have not listened to anything that I have said thus far, I need you to pay attention now because you need to know, when are you going to get your money? So the first thing we need to understand is, number one, Social Security, we do not pay for partial months. You have to be that age throughout the whole month. So if your birthday falls on the first or the second day of that month, we give you credit for that month. Next thing we need to understand is that benefits are going to be paid the month following the month that they're due. So, say, for example, if you contacted Social Security in this month, December, and said that you want your benefits to start or to be effective with December, we're going to say, great. And that means your first payment is going to come in January. And then, depending on your day of birth, that will determine what Wednesday of the month you would receive your payment. So, if your birthday is the 1st through the 10th, that is the second Wednesday of the month. The 11th through the 20th is the third Wednesday of the month. And the 21st through the 31st is the fourth Wednesday of the month. Kind of keep those dates in the back of your mind there, so that as you're planning for retirement, you know when you're going to start to receive that Social Security benefit. And if you realize all of your bills are going to hit you at the first of the month, but you don't get your Social Security check until the end of the month, my suggestion to you is, please prepare. Start saving money now so that you'll have enough to tide you over until that Social Security benefit can start for you, because your payment date, that is going to be set in stone. I've seen many people come into the local office trying to appeal that date. When I was a supervisor, I have yet to see anybody win that one. So just make sure that you are preparing yourself. Medicare. What Social Security's responsibility is with Medicare is very limited. We at Social Security, we're going to do two things when it comes to Medicare. Number one, when it is in time for you to enroll in Medicare Part A and Part B, Social Security is the federal agency that you need to contact so that we can take that application and we can get you enrolled in Medicare. Secondly, once you are enrolled in Medicare and you have started to receive a cash benefit from Social Security, then by law, we at Social Security, we are mandated to deduct that premium out of your Social Security check, and we send that over to the Center for Medicare and Medicaid Services for you. So the two things that Social Security does with regards to Medicare is, number one, we take your application, and number two, we take your money. That is it. If you have questions about what is covered, or the different parts of Medicare, unfortunately, we at Social Security, we're not going to be able to address those for you. We would have to refer you over to the Center for Medicare and Medicaid Services to have those questions answered for yourself. So let's look at who can get Medicare. Anyone who's age 65 or older, or anyone who's been on Social Security disability for at least 24 months, individuals with ALS, and of course, individuals who have permanent kidney failure and receives maintenance dialysis or a kidney transplant. Those are going to be the individuals who would be eligible to enroll in Medicare. With Medicare, there are three different enrollment periods that we need to pay attention to. The first is called the initial enrollment period. This is your very first opportunity that you get to enroll in Medicare. This is a 7-month window. It starts 3 months before your birthday month, and 3 months after. Again, this is your very first chance or opportunity that you get to enroll in Medicare. The next enrollment period is called the special enrollment period, sometimes called the SEP. This is going to be for those individuals who are age 65 or older and still working. So as long as you are covered under a group healthcare plan, either your own or your spouse's, then whenever the individual who has the insurance, when they leave employment, at that point, you have 8 months to contact Social Security to enroll in Medicare, and we consider that to be timely enrollment. The last enrollment period that I have here is the general enrollment period, or the GEP. This is going to be every single year from January 1st through March 31st. This is going to be for those individuals for whatever reason, they did not enroll in the initial enrollment period, or maybe you were dropped. If you didn't enroll, then this is your opportunity to re-enroll. Also, what we at Social Security, we have to look at is to determine what was your first opportunity you could have enrolled in Medicare, to determine whether or not that 10% penalty would be assessed here. Starting this year in 2023, anybody who enrolls in January, February, or March, and whatever month that you enroll in, now coverage starts the very next month. Whereas in the past, you had to wait until July for your coverage to start. Now, under the initial enrollment period, the changes that were made effective this year is now anyone who enrolls 3 months before your 65th birthday, your coverage starts in your birthday month. If you wait until your birthday month or 3 months after that to enroll in Medicare, so now in whatever month you enroll in, coverage now starts the very next month. Whereas in the past, you had to wait sometimes up to 3 months down the road to be enrolled in Medicare. With Medicare, there are two different parts that we need to be aware of. First of all is we have original Medicare, sometimes that's called traditional Medicare, or you may hear about Medicare Advantage, also known as Medicare Part C. With original Medicare, you can enroll in Part A, which is your hospital insurance. But remember earlier when I told you, as long as you have that minimum requirement of that 40 quarters of coverage, if you have that, Part A will not cost you anything. It'll be free to you. But if you have less than 40 quarters of coverage, then you may have to pay a monthly premium for Part A. And the most that an individual can pay for Part A, I want to say, is somewhere in the neighborhood of around $506, and that is per month if you had to pay for Part A. That's going to be looking at the maximum amount that an individual would have to pay. Now, Part B, everybody has to pay for Part B. The base premium for Part B as of right now is $164.90. Starting in January, it will be $174.70. And again, that is the base premium. If you are someone who makes a lot of money, in addition to that base premium, you may have to pay an additional surcharge. And I'll talk about that just a little bit later on in the presentation today. You can add on to original Medicare a Part D plan, that is your prescription drug plan. The average cost of that is somewhere in the neighborhood of $34 a month. So that is in addition to that Part B premium. If you have original Medicare, you can also choose to add a supplemental insurance coverage, or that Medigap policy, which is going to help you to pay some of those out-of-pocket expenses. Now, your other option that you may want to choose is Medicare Advantage, also known as Medicare Part C. So even if you've decided I'm going to go with a Medicare and Advantage plan, just remember, you still have to come to Social Security first, enroll in Medicare Part A and B. When you get that red, white, and blue card, then you're going to give that information to that Medicare provider, that Medicare Advantage provider, and then they will switch you over from original Medicare to the Part C plan. But with Part C, this is where private companies, they like to bundle together Part A, Part B. Sometimes they'll throw something extra in, maybe Part D, or a vision, or a dental plan, or even a gym membership, all for a predetermined cost. And that cost is going to vary from provider to provider. One of the things that I do tell individuals with regards to Medicare, that it is going to be overwhelming. I call it the Medicare tsunami, because it just seems that as you get closer to the Medicare age, all of these companies are overwhelming you. You're getting telephone calls, you're getting text messages, you're getting emails, and you're getting letters in the mail from all of these different providers screaming, pick me, pick me, pick me. What I'm going to tell you is that you need to, number one, slow down, think about what your needs are so that you can make an informed decision with regards to Medicare. One of the best places for you to start to get general basic information about Medicare is, of course, going to Medicare.gov, because this is where you're going to get unbiased information about the basics of whether you want original Medicare or if you want an Advantage plan. When you go to the Medicare website, they do have a search bar, and you want to type in there, if you're going to stay here in Georgia, you may want to search for the Georgia State Health Insurance Plan or the Georgia SHIP. Or you can also type in someone to talk to. If you do that, then it's going to bring down the bar for every state, and you're going to click on Georgia, and it's going to list all of the organizations that may be able to give you some help or some guidance. But especially if you contact the Georgia State Health Insurance Plan or the Georgia SHIP, they have an 800 number. And what is great about them is, number one, they're nonprofit. They don't have a dog in the fight. So as you talk to them about what your options are, they're going to give you what would be best or what is available out there, depending on whatever it is that you're telling them about your circumstances. So that way you can make an informed decision about which plan that you think would be best for you. So that's one of the best places that you're going to start to get information. Now, I do have a couple of scenarios here before we wrap this up today. This first scenario talks about that if a person has started to receive a cash benefit from Social Security as young as age 62. So when this person reaches age 65, do they need to come running into Social Security to enroll in Medicare? The answer to that is no. Reason being is 3 months before you reach age 65, we at Social Security, we're going to automatically enroll you in Medicare. We're going to send you a letter in the mail that's going to say something to the gist of, congratulations, we've enrolled you in Medicare. You're going to get your red, white, and blue card in the mail. And the next thing that you're going to notice is money will be missing from your check. Because remember, the two things we do with Medicare, we're going to help you to enroll, and then we're going to take the premiums out of your Social Security benefit, and we send that over to the Center for Medicare and Medicaid Services for you. So you don't have to do anything in this scenario. Now, this next scenario, it talks about that if you are still working at age 65, and as long as you are covered by a health insurance plan, either from your employer or your spouse's employer, I always tell people you got options here. This is where you may want to talk to someone in your HR department to determine, does your employer require you to enroll in Medicare? If the answer is no, then think about enrolling in Medicare Part A only, because remember, A is not going to cost you anything. And you're going to tell us, no, I do not want Part B because I have insurance through my employer. Then when you decide to leave employment, you have 8 months to contact Social Security to enroll in Part B, and that is considered to be timely enrollment. Also consider that if part of your benefits package, that note in the middle of the screen, that if you have elected to have that high deductible health savings account, and this is where you and your employer are putting a portion of money into this savings account for health related reasons for you, what IRS says is that both of y'all, you have to stop putting money into that account 6 months before you can enroll in Medicare Part A, because otherwise you're going to subject yourself to an IRS tax liability. So just make sure that if you have that high deductible HSA, everybody has to stop putting money into it 6 months before you can enroll in Part A. And normally what I tell people, that if you're still working at age 65 and you're transitioning into retirement, I know on the screen here it says 2 months before you retire, contact us. Really and truly, you want to contact us about 3 months in advance, because you're going to need to do a couple of things for us. Number one, go to our website and you're going to get these two forms for us. The first form is called an L564. This isn't a form that someone in your employer would complete for you, somebody from HR. What they're going to provide for us is the start date of your health insurance coverage, and they're going to tell us the effective end date, because that end date tells us at Social Security when to start counting those 8 months to see what that time limit is going to be for you to enroll in Medicare timely. The next form that you're going to complete is the CMS Form 40B. That is the actual application where you will check, yes, I want Part A, or yes, I want Part B. What I'm going to remind everyone who's watching today is to be sure that you send both of those forms back to Social Security together. Think of those forms as a happily married couple. They love each other so much they can't stand to be apart from one another. So wherever one goes, the other one must go. Think of them like peas and carrots, peanut butter and jelly. They got to stick together and come back to Social Security, because if you send one of these forms without the other one, there is nothing that we at Social Security can do until we get the second form. And at the point that we get that second form, that is the point that we will process your request to enroll you in Medicare. And let me just tell you, we will not go back retroactively. So please make sure that you get everything to us in a timely fashion so that we can ensure that we have you enrolled in Medicare timely. So that way there's no lapses of coverage for you. Now, this next scenario talks about that if a person is not working at age 65 and they have not started to receive a cash benefit from Social Security, they can file what we call is a Medicare only application. When they do that, what happens is the Center for Medicare and Medicaid Services will send them a quarterly bill where they will have to pay for their Medicare premiums 3 months in advance. Now, if you find that you cannot pay 3 months worth of Medicare premiums at one time, please consider going to Medicare.gov and creating a Medicare account for yourself. This allows you to log in, pay your premiums directly to Medicare. That way you can ensure that your premiums are current and up to date. Also, you're going to be able to see any transactions that have taken place utilizing your Medicare number. But the most important thing is to make sure that those premiums are current and up to date. The other option is that you can use an option called Medicare Easy Pay. This is where you're going to give Medicare information from either your checking or your savings account, and they will debit that account on a monthly basis for you. And then at whatever point you start to receive your cash benefit from Social Security, then at that point, we will start to deduct the premiums out of your Social Security benefit. Okay, so earlier I stated that the base premium for 2024 is going to be the 174.70, and we at Social Security, we look at individuals' tax returns from 2 years in the past to determine whether or not you're going to have to pay an additional surcharge for your Medicare premiums. And this is going to be for those individuals who are higher wage earners. So for 2024, Social Security looks at your 2022 tax return to see where does your modified adjusted gross income, where does that fall? Then depending on if you're an individual or a member of a couple, wherever your income falls, that determines how much you have to pay for Medicare Part B. And if you're enrolled in a Part D plan, how much you have to pay for Part D. Also, if both you and your spouse both are enrolled in Medicare, the amount that you see here on the screen is the amount that each member of the couple would need to pay. Here on the screen is just a snippet of a Medicare page. Like I say, this is where you're going to come to get the basic information with regards to Medicare, talking about what's covered, what is Medicare, what's the difference between a Medicare, original Medicare and an Advantage plan. Again, this is the great place to start for basic information regarding Medicare. And here on the screen today, what you're going to see is an example of a Medicare card. If you've never seen one before, this is going to be a series of letters and numbers on your card. Also, it's going to show what you are enrolled in, whether it is Part A or Part B, and the effective date of that coverage. And I believe this is going to conclude my presentation. And what I'm going to say to everyone is thank you so much for the opportunity to be here with you today. And I look forward to coming back and being able to present again for the Gwinnett County Library System. And it is always a pleasure.